We do have some Macy's earnings too, though. I think some viewers are going to be happy to hear this if they're long shareholders, because earnings beat $2.45 adjusted. The street was just looking for $2 even. Revenues of $8.67 billion compared to estimates of $8.47 billion. The retailer putting up pretty strong full-year earnings and revenue guidance too. And then comparable sales, so this is the owned brands plus licensed brands, coming in up 27.8% year over year, up 6.1% if you're looking at the numbers pre-pandemic, so Q4 2019. If you strip out just digital sales, those are up 12% year over year, 36% compared to the fourth quarter of 2019, which means online now makes up 39% of sales, at least in the most recent quarter. So that's down about from 5% higher penetration in 2020 for the same quarter, but up from 9% in 2019 with the penetration. Now, the department store also issuing a new $2 billion buyback program and raising the dividend 5%. Gross margin coming in at 36.5%. That was up almost 300 basis points from 2020, down 30 basis points from 2019. Some of that was driven in part by higher prices. I spoke briefly with Macy CEO Jeff Gennett. He said the evaluation with AlixPartners of an e-commerce spinout just doesn't make sense. He said Macy's is stronger financially as, quote, one integrated Macy's. It delivered greater value than a separation of physical and digital value. On inflation, he said we are in a very different place with inflation than we used to be. This time, we have data and analytics. We're sourcing better. We're buying less. He gave some examples. He said, yes, a lot of categories have cost increases, but look at furniture. We can move a sectional pricing from $2,000 to $2,200 to take account of inflation. But an opening price sofa that would have been $499, when we increased that price, the customers accepted that one less. We had to take that back down, so a lower gross margin on that item in particular. He said overall in 2021, the average pricing was up 11%. They expect the average unit retail price to go up 5% this year, so half of the increase they saw last year. Gennett says that he doesn't expect international tourist spending recovery this year, so he's still about $500 million to recapture there. He said the supply chain is getting better, but it's still challenged. Labor shortages, those are getting better, at least more manageable with some of the things that they're doing and offering to employees. And lapping stimulus packages, that's still a bit of a question to see how customers will handle that with their spending. Joe, back over to you.